welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti, and this show is all about your stock-related queries. So write to us on any of our social media channels or through the YouTube live chat or through the WhatsApp number that's flashing on your screen. Be it a short-term strategy, stock play or a long-term investment. And any query, we'll get them answered by a fundamental and technical guest. But before that, let's take a quick check of the markets. With the Nifty 50, that's pretty flat right now, but has turned positive. So trading with a bit of a positive bias there, but mostly flat. Bit of a day of chop and churn. Started off on a negative note and continued that until just a couple of minutes ago when it turned into the positive. Let's look at the broader markets as well. You have the mid-cap index also flattish at this point, not doing too much there. Small cap in the red, down about 0.2%. Let's look at the constituents of the Nifty 50 and see what's gaining and what's losing. You have something like a Coal India that's doing very well in trade today. It's also the biggest gainer on the index. You have SBI, Tata Steel and Power Grid both in the positive. On the other hand, you have ICICI Bank, HDFC, both pulling the index down. Then there's two IT names as well, Infi and TCS. So essentially banks and Infosys, TCS that are pulling the index down today. Let's look at what sectors are moving. You have most of the sectors, bit of a 50-50 actually there. Metals doing very, very well in trade today, up 2.5%. And you have PSU Bank that's up over 1%, energy up over 1% as well. On the other hand, you have FMCG, consumer durables, realty, pharma, all in the red today. FMCG down about 0.7%, so biggest among the sectors that's losing. Let's look at some of the individual stocks as well. You have something like a GAIL that's up about 0.2%. It came out with its earnings yesterday, but not too much of a reaction off the high point of the day for now. You have something like a Trident that's down about 6% in trade. Now this also comes on the back of very weak numbers. You saw the pad down about 54% and you're seeing that in the impact today. Been lower since it opened this morning. Let's look at something like a Concor. There was a Citi note on Concor and they've increased the target price to 1,340 rupees, but not a lot of impact there, down about 0.8%. Let's look at something like a BEL as well, which is also the focus for today. Bharat Electronics up 7%. Along with that, Bharat Dynamics, just pointing out that the stock is gaining today as well. This stock has been on a tear for a while, up about 6% in trade. However, the focus for today remains Bharat Electronics. It came out with its numbers, and we're going to discuss that in just a bit. But the whole defense sector has been in the focus for a while now, and it seems like the stocks have been on a tear since a while. This valuations may be expensive at this point, but there's a lot of positivity in the market clearly, and people are still buying these counters, and so a bit of a positive in the defense space. You look at something like a Cochin Shipyard, you look at something like Garden Reach as well, doing very, very well in the last couple of sessions or so. So a lot of positivity in that space. We're seeing that this sort of positivity in the metal space as well. But let's look at some of the other counters as well. You have something like a Delivery that's down 9% in trade today. There's something like a Triveni Turbine that's down about 5.5% as well. But let's get back to the focus for today, which is Bharat Electronics. And to break down the numbers for us, we have my colleague Anushi joining in. Anushi, talk to us about the numbers that Bharat Electronics came out with, very strong set of numbers, and also talk about the defense space as a whole. What's working for them right now?
Hey Smriti, so I'm so glad that you mentioned about the defense space. Even if you look at the last week, all the major defense stocks have been in focus. Let's take even Mazga or Hindustan Aeronautics, strong earnings for Hindustan Aeronautics. But I specifically want to come to Bharat Electronics over here. So the company reported a 32% of revenue growth in this quarter, while the EBITDA has seen about a 25% of growth. Margins though have slipped to 27% compared to 28%, but this was on the account of cost of materials going high at about 47% and the other expenses also going about 68% higher. But what we are clearly seeing that the street has been taking this into account, and still the stock is buzzing, because even if you look at all the Bloomberg estimates that have been there, the stock, it is above the expectations, and that is what is reflecting in today's stock price as well. Net profit has also seen about a 30% growth. Now, even if you look at the order book which the company came out with earlier, there has been a 25.2% of a order book growth over here, which stands at about 76,000 crore as of now. So while we wait for the conference call tomorrow to get more details on what the company expects for FY25 going forward, then let's look at the other important aspects that we should be looking out for. So first is the Nomura, wherein they continue to have a buy rating with about a price target of 300 over here. They expect the revenue CAGR growth of about 16% with the strong order book of 76,000 crore as mentioned above over the course of FY23 to 26 period. Even if you look at the ROEs, they are expected to improve to 27.7% in FY26 compared to about 24% that the company had reported last fiscal. So that again stands as a point. So this will again support the premium valuation with the healthy return ratios in place. And even if now that we have covered about Bharat Electronics, even if we look at the whole India defense play, that remains a very positive sector, a significant opportunity over here with about $138 billion of over the course of FY24 to 28 in India's defense sector. Even if you look at the defense capex, the share is expected to increase to about 37% of total budget in FY35. That is what Nomura says. And again, the momentum is expected to continue with defense exports, government's increasing focus over here at rupees 300 billion over the course of FY24 to 30. So these are some of the key points that we should be looking out for.
Right. Thank you, Anushi, for that. But let me introduce you to the guests for today. We have Dalal of Natverlal and Sons Stockbrokers, along with Swati Hotkar, who's the AVP Technical Research at Nirmal. Welcome to both of you, and thanks for joining in. Samir, I'm going to come to you first on Bharat Electronics specifically and defense as a space. Now, we've seen a couple of stocks, including Bharat Electronics. You see these shipbuilder stocks as well that have run up in the last couple of months. So now the belief may be that valuations may be expensive at this point, but you look at what the brokerages are saying, still they're predicting a decent amount of upside into these stocks. What would you suggest to somebody who now wants to enter these stocks, and also the people who have been holding this for a while? Would you suggest holding on to it, or maybe booking some profits at this juncture?
So good morning to you and to the viewers. So, I rightfully said that the defense space has been buzzing. And, the defense space has been buzzing given the fact that we have a lot of expectations of order flows coming from overseas market, given that certain amount of the projects have to be executed within India, even if we are buying the equipment and machinery and all of those from abroad. Apart from that, of course, these independently also make certain amount of things which are sold directly to the government, to the various sectors. And given Bharat Electronics does have, it's one of the few companies that are catering to the space and have a good market share and good lead in that space. So, they will continue to do well. But what you also rightfully said is that valuations have changed quite drastically, where they have moved up quite a bit. So let's talk about Bharat Electronics, which is trading at probably closer to 40 times earnings, 42 times earnings. And if we even project our growth of about 20% and operating leverage peaking through, because of which profitability increased by 30-35%, we're still talking of a 8.5 rupee earnings per share for next year. If I 270 divides the 30 times earnings. So valuations are not cheap. Now, for someone who's already invested, they could probably stay invested because the growth opportunity over the next few years is going to be quite significant. But if you haven't invested, I would say wait for corrections. You will get opportunities, you will get market corrections where even sectors which are very hot and, in the limelight like defense will see a correction, and that might be the right point to get in. So we remain positive on Bharat Electronics, and like all the brokerages are saying, the price targets are higher. But at what price you buy will determine the kind of returns you make. So I say wait for corrections, wait for opportunities to buy it, and don't go out and chase the stock.
Right, fair point. Let's start off with the queries now. The first question is from Rajesh from Bangalore. They're talking about a counter, Texmaco Rail and Engineering. Now, they say they have bought these shares at a price of 100 rupees. It's currently doubled from there, trading above 200 rupees. So, Ati, I'm going to come to you on this one. There's a rally in the stock in the last 1 year, up about 200% or thereabouts. Would you suggest booking some profits, or would you suggest maybe continue holding on to it for a little bit more?
Yes, the technical setup, Smriti, is definitely positive on this particular counter. If we look on the higher degree, say the weekly and the monthly charts are really doing very well on the technical front. Trading in the pattern of the high tops, high bottom. Only the interesting fact is that the stock is in the formation of a flat pattern on the monthly chart, and probably it will give the breakout very soon. And the stock is on its way to reach the all-time high, which comes to at around 231 levels. And I believe that it has a potential to build a new high at around 260 to 270 levels. So the longer-term horizon is definitely positive. One should hold their counter on a buy side. If possible, maintain the profit stop loss of a 180 and carry your long positions for a target of 240 to 260 levels on high side.
All right, fair point. The next counter we're talking about is NHPC. This one's from Sanat. They say if this is the right time to buy something like an NHPC. Samir, from a longer term perspective, the stock is up about 5% in trade today. If you look at the last 1 month performance, it's gained about 15%. Would you suggest buying at these levels, or maybe wait a little bit more for a correction to happen?
So honestly, a lot of the stocks in the power sector have seen run far ahead of what I think fundamentally justifies, right? So we're not denying the fact that renewable energy is a big focus area. NHPC, of course, has its hydropower projects, but they're also looking at setting up solar power projects and, various other things, and they have a huge capex plan lined up over the next many years. But you also got to realize that this is going to require a lot of capital inflow. The returns are going to take time to come through. Initially, the return on equity and return on capitals may not be as great. So, like I said earlier, we find that overall market valuations are a little bit rich, and there will be periods in the next 3 months where the entire markets will correct, and it's very rare that you won't find stocks like NHPC also correcting at that point. So even though the power sector growth opportunity remains good, I would wait for corrections. In fact, if I was someone, I would probably not even buy an NHPC. I'm more focused on NTPC. I think the player, it's a larger player with thermal plus now getting into renewable with the huge solar wind farms. The scalability of that is quite good given the cash flows, given the balance sheet, given all of that. For me, NTPC would be a better play than NHPC. But if the person is interested in NHPC, I say wait for correction. You'll get it around 85, 90. I think it may make sense to buy it at that point of time.
Right, fair point. So NTPC over NHPC for Samir. Next question is on Restaurant Brands Asia, and this is from Marut, and they say fundamentally, okay, now the tide may have been turning for this one, Samir, right? You saw a mixed set of numbers for Restaurant Brand Asia. In the QSR space, would you suggest buying this from a longer term perspective? Do you think there is a positive outlook from here on?
100% there's a positive outlook. We are very, very positive on the long term of the entire QSR space. The QSR space has actually done massive underperformance over the last maybe 6 months to a year. And that is because of the fact that competition was increasing, the discretionary spends because of the higher inflation and higher interest rates was reducing. As the cycle turns, we believe the demand for this space will come back. Now, coming specifically to Restaurant Brands, actually, if you say it's a mixed bag, I thought the results were quite good given the fact that a lot of the other companies did not see same-store sales growth for the year. Restaurant Brand Asia has actually been able to deliver an SSSG of only 2.7, but they were able to deliver that. So that is a big positive. Now, they are constantly increasing their reach within India. They also have the international piece in Indonesia where they're expanding. So I believe that overall they will continue to see growth. Now, this business is very high on operating leverage because all my cost is already into the business. And the direct increase in consumption, whenever it happens over the next 6 months or a year, will lead to a massive increase in profitability. So we are very positive. We have a buy on Restaurant Brand Asia. We have a buy on Barbecue Nation. We have a buy on Westlife. Well, Westlife is probably the most expensive of the lot. Jubilant Food also is interesting. It's corrected quite a bit. So we are positive. Restaurant Brands is also a buy for us.
All right. And yeah, mixed bag, Sameer, in terms of, if I remember correctly, the loss had widened this quarter, but revenue grew. But coming back to the technicals on this one, Swati, you look at how the stock has performed. If you look at the 1 year performance, it's in the red. But in the last 6 months or so, there has been a positive sort of a change in the stock trajectory. Is that something you see continuing from here on as well? And and do tell us a target if you have on this counter.
If we look on a larger degree, say on the yearly charts since 2021, the stock has not given any kind of a performance. In fact, it was trading in the lower channel as such. And as of now, it has not given any sign of a reversal on the higher side. But definitely on a short-term period, we can see that this particular counter has given a form has cluster supported around 90 to 95 levels. So that can be act as a crucial support levels. Upside breakout comes at around 110 levels. If it manages to give a breakout of that level, then definitely we can see some trend reversal on the higher side, and we might get a target of at least 140 to 150 levels on the higher side. So looking towards the risk reward ratio, and if one like to take a long positions, fresh position, definitely one can take a buy call, normally at least 30 to 40% at the current market price. And once the stock gives a clear sign of a reversal, then definitely one can add on. So it's a positive view on from my end.
All right. It's time to slip into a short break now, but stay with us, Sameer and Swati. We'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. Let's dive into the queries again. This one's on Maharashtra Seamless. The queries from Vivekanand and the question they're asking is that they have already bought the counter at a price of 908 rupees. It's below that price. It's trading about at 808 rupees. So I think I'm going to come to you on this one for somebody who's sitting in a bit of a losses here, and the trajectory for the stock in the last 6 months or so is nothing but negative. Would you suggest getting out of it, or maybe stay on for a little bit?
See, the overall technical point, from the technical point of view, this particular counter looks little bit weak, because from the last, as you said, from the last 6 months, the stock has not given any kind of a performance if we compare with the market as well. The interesting fact is that it has formed the cluster support at around 790 so levels. So I will suggest to hold the long positions by keeping a stop loss of a 790. We might get some sort of a rise on some trading sessions, because last week also we have seen that the stock has managed to tick off 844 levels. That is acting as a very crucial resistance level provided by its 20 days moving average.
Fair point. Next counter is RVNL. And this counter is on a thread today. If you can pull up the chart, yeah, it's up about 13% in trade. We have a question from on RVNL from Swastik. They say they bought the shares at a price of 176 a piece. Samir, almost doubler from there. Great set of numbers in the fourth quarter as well. What's the long-term view on this one? Would you suggest maybe taking some money off the table or stay invested?
Given the kind of profit he has, work with stop losses if you want and stay invested. So let's put it this, the infrastructure investment that's going to happen in India, and especially in the railway space, is going to benefit a company like RVNL. I won't deny the fact that valuations are not cheap anymore. But given the fact that order flows will continue, right now what's happening in the market is people are looking at the order backlog like we did in 2007 and 2008. Where orders won by infrastructure companies were being calculated into the profits in the next 2 years, and cash flows were being discounted. We are going through a similar situation, and given the kind of impetus that is there for especially the railway segment over the next couple of years, our expectation is that the BJP government will come now, unless something changes there drastically. If the order inflow on the infra side continues, I think RVNL will continue to do well. Keep a stop loss if you want to, and keep increasing the stop loss as the stock price keeps moving up over a period of time. And stay invested, because I think given the kind of flows, they will continue to outperform.
All right. Fair point. The next question is from YouTube, and this one's from Anush Patel. They're talking about two counters here, and Swati, I'm going to come to you on both of these counters. They're asking about Medhani and Jindal Saw. They want to know what are the entry points for these two counters. If you can look it up and tell us for Medhani and Jindal Saw.
Yes, if you look towards the Medhani, yes, definitely Medhani is really doing very well. One can take a long position at the current market price also, because from the last 10 days already we have seen a very positive momentums from almost 400 to now it's trading at 493, 490 levels. At the current level, in order, if anybody don't want to miss this rally, at least they can buy 20 to 30% at the current market price. And on any dips towards to 450, definitely one can add on. I'm looking for a target of 540 to 570 on the high sides. Coming towards the Jindal Saw, this particular counter is little bit weak at the current moment, because price and the volumes are not doing in a right way direction as such, and we are witnessing some sort of a profit booking on every rise towards to 570. I believe that this kind of a profit booking is likely to be continued, and downside, if it's break 540 level, then more downside can be seen up to 520 to 500 levels. So one should wait for a Jindal Saw. Don't buy at the current market price. Any dips towards to 520, one can add on for a target of 580 by maintaining a stop loss of 500 levels on the downside.
All right, fair point. Next counter we're talking about is Tata Motors. This one's from Bhaskar from Kolkata. They say they bought the shares at 637 and they're planning to buy more. Samir, would you suggest buying Tata Motors at these levels? They bought it at 637 before. Results, quite decent results, but from a longer term perspective, is this a good time to enter a stock like Tata Motors, or maybe within the space there is some other favorite that you have?
So super results, okay. Barring even, I mean, even if I take out the one-off that was there, the results were phenomenal. Where the problem lies, and after the results, why the stock has come off, is because the management guidance by itself was a bit subdued, right? Now, when you have a management saying that growth is going to have a little bit of difficulty, I would not be in a rush to go out and buy the stock, because they obviously see something, maybe the orders that are coming through from their, from their distributors, or even the expectation of the slowdown that is probably there in Europe and the US markets, and that is kind of weighing heavy. So I like Tata Motors. It is one of the counters that I would recommend buying. But I say wait. In the next 3 months, you'll probably get an opportunity below 900. So wait when it goes below 900, one can add on. The fact that he's identified at 630 is great. You want to add is also a good idea, because the long term for Tata Motors remains good, given the fact of the Indian market growth, the international market growth. Kind of investments they're making will eventually pay dividend. But for the time being, wait for a correction, given what the management commentary was, and you will get good returns over the next 2 years, but wait for a correction to buy.
All right, we're almost out of time, but I'm going to take one last question. This one's on Kotak Mahindra Bank, and we're going to take a technical view on this one. So, Swati, we've seen a lot of chop and churn in this counter in the last 1 month because of some regulatory action. But from a technical standpoint, would you suggest buying at this juncture?
Yes, for a longer term perspective, definitely one can take a long positions, because we have seen a very good kind of a recovery in this particular counter from 1550 to now 1700s. This particular bank, one can take a long positions. Upside, I'm looking for a target of minimum at least 1800 to 1900 levels on the higher side. So definitely one can go for a long position at the current market price.
All right. Thank you so much, Swati, for that. And thank you, Samir, as well, for joining in on the show today and for answering so many questions for us. And viewers, thanks for tuning in. We'll be back tomorrow and we'll take more questions tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.